Market plunging more than 7% in early trade. That was after Australia introduced strict travel restrictions and moves by the US Central Bank. Finance reporter David Chow is with me in the studio, and reporter David Taylor is at the Australian Stock Exchange in Sydney. David Taylor, to you first of all, where are things now?
Ros, extraordinary developments again today. The market on Friday actually rose 10%. It fell around about 7 or 8% and then ended up in positive territory. But it was a trough to peak rise of 10%. Now, you might think that's a good thing, but brokers have told the ABC this morning that the only two times that has happened in history is in October 2008, when the global financial crisis was reaching epic proportions, and of course in 1931 as well, after the 1929 stock market crash. Basically, stockbrokers telling the ABC it's not good to see a market rise by that much. It's telling us that there's a lot of volatility and anxiety in the markets, even though it's a big rise. But in addition to that, despite stimulus measures from all central banks in developed economies around the world and governments throwing stimulus at economies to try and boost the economy, the problem is that we're still getting rising cases of coronavirus. In fact, at last check in the United States, 2,952 cases, 57 deaths. So when Wall Street futures opened a few hours ago, that points to tonight's session, what traders are basically saying is just wonderful we're getting all this stimulus. That's not a problem. That's fantastic. But the economic damage caused by coronavirus is still unknown. So whilst the stimulus is good, the great chasm that you see before you in financial markets is still rather dark. We still don't know exactly what the ultimate financial impact will be, and that's the problem, Ros.
OK. And David, the market regulators here have imposed restrictions on trading.
Indeed, and it joins their US colleagues as well, because as Wall Street futures, as I just mentioned, opened up a few hours ago, there was a limit down applied there, which simply means that the market fell 5% at the open, and the regulators stepped in and said, we're not having that, that's too much, that's too difficult, we're going to apply a halt to trading. In fact, Wall Street futures haven't resumed trading since that point. Wall Street trading is now offline, essentially. And our regulated ASIC, which is part of the Financial Council of Regulators, today, just before the market opened, said you cannot trade. The amount of trading that you need to do, that you can do, will be 25% less than what occurred on Friday. Simply, Ros, because they couldn't process the number of transactions that happened on Friday until early this morning. So if that happened again today, they simply wouldn't be able to process the transactions. There's not enough manpower or computer power to do that. So they had to put those stops in place.
Wow. So with these continued falls and with these continued market measures, David, we're really heading further and further into uncharted territory.
We are heading into uncharted territory as far as the cause of the market crash is concerned. So we're down now over 20%, we're still in the bear market, and no one quite knows where this will stop. But it's not uncharted territory in terms of peak to trough falls. You have to remember, in the global financial crisis, the market fell from peak to trough 54%. And we're only at sort of between 20 and 30 now, so there could potentially still plenty more to fall. And market valuations certainly have seen a lot worse than this. But yes, in terms of how we price this into the market, how the market digests the news day to day and what the economic impacts will be, no, we haven't seen this before.
David Chow then with me in the studio. Which are the worst hit sectors today?
Well, Ros, when you look at the boards, pretty much everything is in the red. Everything has been hit hard. There was only one sector which made gains, and that's consumer staples, dominated by Coles and Woolworths. So they're still doing well, but some of the worst hit sectors include energy because of a sharp fall in oil prices. Financial stocks like the big four banks are hit hard as well because of the expectation that after the US Fed did an emergency rate cut, there's a chance the Reserve Bank here might have to do an emergency rate cut within the next 3 weeks before their meeting is scheduled. Technology and healthcare also among the worst hit stocks too, because they were the best performing sectors last year. So it's a massive correction to their share prices. Many people say those two sectors in particular are overvalued, due for a correction or a dip into a bear market, in fact. So the big four banks, I guess, and the miners are the ones that have fallen, had some of the biggest falls, so they're weighing the most heavily on our market. OK, so David Taylor was talking about Dow futures then. What is expected to happen when Wall Street opens for its Monday? Well, according to Dow futures, it looks like it's going to be a shocking day on Wall Street tomorrow. So looking at the futures market, it's down by about 5%. Dow futures down more than 1,000 points. So it can't actually fall any more than that. There's actually a limit that the New York Stock Exchange put on these trades, the futures trade. So yeah, it could fall by a lot more than 5% tomorrow, and that is in essence why our market has fallen a lot too. It was expected to open higher, but Australian traders have looked ahead to how Wall Street is going to open tomorrow and have taken negative cues from that. So I guess the combination of the strict travel restrictions on Australia, the US announcing an emergency interest rate cut the second time in 2 weeks before their meeting's even scheduled, and New Zealand also announcing an emergency rate cut this morning too, and also the Australian regulators wanting to restrict trade and pump more money into the economy. So the combination of all these things, plus the rising number of infections around the world, has really contributed to the pessimistic mood on markets this morning.
All right, take us through the numbers then.
Certainly, Roz. So when we take a closer look at the figures, the ASX 200 and the All Ords, they're both down very sharply, down by 297 points. So that's a fall of about 4.5%, which is a big improvement over the 7.5% fall this morning, but still a very, very weak performance with all sectors, except for consumer staples, in the red. Now, taking a look at the top and bottom movers, Cochlear, the company which manufactures hearing implants, has been hit hard due to it expecting a drop in the number of surgical procedures around the world. Santos has been affected by the plunging oil price, so its share price is down 10%. Sydney Airport, one of the biggest casualties of this new self-isolation policy for 14 days, which will no doubt scare away travellers. Its share price is down 14%. And the big four banks are also down sharply, with NAB down 6% to share price levels not seen since the global financial crisis a decade ago. And Woolworths and Coles are both up. They're one of the few stocks that are posting any gains. Now, in Asian markets, it's also a sea of red. The Nikkei in Japan is down quite sharply, same as the NZX 50 in New Zealand. Hong Kong and Shanghai will open soon, and they're expected to fall quite sharply when they do open. And in US markets, recapping what happened, Wall Street had its best day in a decade since the GFC. But it came after suffering its worst plunge on Thursday since the 1987 Black Monday crash. And as I said earlier, US markets are pointing to a very sharply US markets are going to open sharply lower tomorrow, down by at least 5%, according to the futures market. And in commodities, the gold price has gone up quite a bit to $1,545 US an ounce, and Tapis crude oil is buying about $31.5 US per barrel. And in currencies, the Australian dollar jumped as high as 63 US cents after the US rate cut decision, but it's since lost all those gains and drifted back to about 61.6 US cents. And that's the latest in finance news.